Hey everyone, you're going to want to stick around for this one. Today we're going to talk about what's happening in the Central Florida real estate market, and I have a mortgage broker on with me. That is coming up next. Good afternoon, everybody. It's Matt Allen here with the Allen team. I hope you're having an awesome day today. I have a special guest with me today. I have Daniel Orjona. He is with Alterra Home Mortgage. He's a mortgage professional. Been in the business a long time. Good morning.
Good morning, Matt. Thank you for having me.
Excited to have you on. We're working on a new program for everybody, kind of giving market updates as to what's happening in the Central Florida market, not only on a real estate side, but also on the mortgage side. Everybody kind of knows right now that the real estate market is on fire, and we're kind of going through some of the numbers here before we jumped on, and I want to kind of run through. I primarily work in the Southwest Orlando area, which is the Winter Garden, Windermere Dr. Phillips area, and I'm going to run through some numbers just so you kind of see where things are at. Currently in this area, there's about 233 homes on the market, which is extremely low. Just in Windermere alone, you're below 50 houses total, and that's condos, townhomes, single-family homes. It's everything. To be below 50 houses is extremely low. If you look at pendings are actually higher. There was 448 pendings last month, which is almost double what's currently active on the market. And then if you look at solds, you're around 275. So we're having more solds than currently active on the market. And if you look at that, and what we like to call an absorption rate, which is the amount of inventory, if it's everything stopped today, how much time would it take to get rid of that inventory? And it's somewhere around 11 to 18 days. Isn't that pretty unbelievable?
Wow, that's amazing.
11 days to get rid of everything.
Wow.
That's nuts. Anyway, so everybody's seeing it, and I wanted to kind of bring in Daniel to kind of talk about what he's seeing in the mortgage industry as far as, everybody's got predictions on rates and things like that. Daniel, what are you seeing as far as what rates might do in the coming months?
Well, the rates, they're going to continue to increase. Right now, we're coming back out of this major health crisis situation. The country is going back into working, even though that we had that situation with the Omicron, the mindset for everybody just go back, to actually go working. So those days of free money has ended, and the interest rate, they continue to climb to the way they used to be before the pandemic right now. Okay. So if you right now, like for example, if you right now are a buyer and you're in the market, it's very important for you to have some close relationship with your loan officer, because the interest rate, they change from day to day. Last week we had a pretty good week. They were pretty stable, and they were the lowest for the past few weeks. But now starting this week, they continue to climb. We're getting the unemployment numbers, and we're getting a new reference from the federal government coming on Thursday, and they're showing that inflation is increasing. Okay. And they don't like that, They don't like that, and a way to control it is by reducing the purchases of those mortgage securities.
Gotcha.
Right now, the mortgage rates, they ranging between 4% to 4.75, depending on your loan program, depending on your credit score, depending on those 8 factors, But right now, if you're seeing in the news, everybody's advertising that the mortgage rate hit 4%.
Yeah. And even though I always talk to my clients and I'm telling them, they're like, we got to buy before the interest rates go up. And when you're still talking 4, to 4.5, even 5%, we're still extremely low. Those aren't terrible rates. I've been in the business for a long time, so I've seen, it wasn't unusual to have a 7.5% interest rate. So, even though that's low or climbing, I should say that, it's still pretty decent. decent rate. As far as home purchases are concerned, one of the things that a lot of people are giving up is appraisal contingencies. Are you guys seeing a lot of homes that aren't appraising for what they have them under contract for, or are appraisers kind of catching up with the market?
You know, I've been pretty surprised with my appraisers, you know, because they have been coming at value like 90% of the time. Very rarely you get something that is not coming up to value, you know, so they catching up with what's going on with the market, you know, and they seeing those recent comparables. So right now we're not having that much issue, as long, you know, the difference is not something unrealistic like once in a while you see out there, you know, especially in today's market, you know.
I see it almost every day. You know, when you're going 50, 60,000 over asking price, you're just asking to have an under appraisal. I actually just had one this past week that actually the appraisal came in 12,000 above what we had it under contract with for, which just blew me away. And it was actually an iBuyer house, which, you know, I'm working with a little more here over the last few weeks because there's not that frenzy going on with homes that are on the market a longer period of time. So a lot of my buyers are switching to looking at houses that have been on the market, you know, 10 plus days in order to kind of rid themselves of that, you know, multiple offer situation that everybody's kind of getting sick of right now.
Yes.
Anything you're seeing as far as specific programs or anything that is a benefit to buyers that we can let them know about right now, or?
Well, like you know, right now, a lot of the listing agents, they getting very picky with the type of offer that they choosing, you know, for their clients.
100%.
So they want to get a lot of those conventional loans, you know what I mean? And conventional loans are not very easy to qualify, but there's some changes that Fannie Mae has done that are applying today that I think that's helping a lot of those buyers to get those conventional loans. And one of them is with the credit score for couples. You know, before, I'm pretty sure that you know this, that for you to qualify for a conventional loan, a couple, they would take the lowest of the two, right?
Right, yep.
Like husband, middle score, wife, middle score, the lowest of the two, that would be the one that they will use to qualify them for the mortgage. Now they change that and they do an average, right?
Interesting.
So if somebody is kind of weak on the credit score, that you can kind of compensate with the wife or the husband, and that will give you more chances, opportunity for that couple to qualify for that conventional loan that they're looking for. So that's one of the things that we're doing right now, you know, trying to help people get those conventional loans so they can have more opportunities in the market, you know.
Gotcha. That's interesting. That's a really great idea. And, you know, it's good if, and I'm a huge advocate of this, when I submit offers, I am, you know, bringing that information forth to the listing agent so that they know that this program might be, you know, a little stronger than another. There's a lot of default right now as far as people going under contract and then canceling the contract very quickly. So we're seeing a lot of that as well. So anytime you can have a strong borrower that has a program like that, that's huge.
And now what we're doing for the FHA borrower, right? Because we have people they cannot go for one reason or another, they cannot go into a conventional loan. What we're doing with the FHA borrower is that we are doing a full commitment before they go out there. You know, so when they go into the market with the FHA loan, you know, even though there's gonna be a disadvantage of having an FHA loan, at least the realtor can say, listen, this guy has a full commitment. We just need to find a house and we can close in maybe 2 weeks.
Yeah, I love that idea. That's huge. I wouldn't even have thought to do that, and that's great. I think that's going to help a lot. I've worked with VA as well, and it's just people have this connotation of a VA or FHA buyer is not strong, and it's something that we need to change, because a lot of them are actually stronger than some conventional buyers. So.
Exactly. They're in a better situation because they qualify more easy for that loan. So they're not going to have as much restriction as conventional loans.
Right. Well, great information. I don't want to keep this too long. We're going to try to do this, once a month, to kind of give you guys an idea of what's happening in the market here direct in Central Florida. I appreciate your time. Daniel, anything you want to say closing out?
No, Matt, just thank you for having me, and looking forward.
Yeah, awesome. Well, thanks again, everybody. Have a good rest of your day, and we'll see you in the next video. Bye-bye.
Bye-bye.
Hey, if you found that market update interesting, check out this video over here. It gives you more tips and tricks for sellers in this crazy market. Thanks.